An easy way to see where future property price growth is going to occur or not occur is to look at transaction numbers. When sales numbers lift, it means competition for properties is increasing, and what generally flows from that is price growth. Sales activity numbers are a great forward indicator of what will happen with prices. It's usually a much better barometer of what's going to happen in a market than looking at median house price data. The figures on changes in median prices published by the various research companies lag the market. They tell us what has happened, allegedly, in the recent past. But sales volumes provide clues about what will happen to prices in the near future. Now, I've followed transaction data for years, and it's evident that steady increases in transaction numbers inevitably lead to future price growth. But it's not immediate, because that increase in buyer activity sometimes takes up to 6 months to translate into price growth, but it will eventually do so. And that time lag is a godsend for real estate consumers because it means they can take action before there is a major change in prices. And it works also when markets are in reverse. Months of steady decreases in sales numbers is generally an indication that the market has passed its peak and is no longer as competitive as it was previously. And in those circumstances, price growth will slow down or prices may eventually fall. Now, the Sunshine Coast is one market where transaction numbers have been slowing in the past 6 months, although prices are still strong. Given the trend with sales numbers on the Sunshine Coast, it's clear that this market has moved beyond the peak. It had 3 or 4 years of exceptional price growth, and now we can see sales volumes in many of its suburbs starting to taper off. My latest analysis of the March quarter transaction figures show that sales are rising now in relatively few Sunshine Coast suburbs. Most of them have plateaued and are well past their peak. This has not yet been reflected in price data, but it soon will be. Most locations on the Sunshine Coast have recorded annual price growth above 20%, and in fact about 30 suburbs have recorded annual growth above 30% in the last 12 months. The latest figures for the past quarter show multiple suburbs recorded price growth above 5%, some are even in double digits, and in fact Alexandra Headlands was a real standout, recording a 35% increase in its median house price in just 3 months. It's important to note that the Sunshine Coast has its own cycle. It was booming because of what was happening in the local economy long before the national boom, which started about 2 years ago. So it's not surprising that it's now started to slow down, whereas many other parts of the regional Queensland market are still rising, including Toowoomba, Rockhampton, Mackay, Bundaberg, Gladstone and Townsville. Now, another market to experience a slowdown in sales activity is Sydney, where sales volumes peaked in the middle of last year and have been trending down ever since. And there was a particularly noticeable drop-off in sales volumes in Sydney in the March quarter this year. And that is now starting to be seen in price outcomes, with the overall median for Sydney dropping, though only slightly, in both April and May. Now, the media has blamed interest rate rises for a drop in Sydney values, but in fact sales volumes were falling long before interest rates increased and even before interest rate rises were being talked about as a possibility. So blaming those Sydney decreases in prices on interest rate rises is a serious misinterpretation of what is happening. The key point, however, is that there are very few markets around Australia which are replicating the Sydney experience at the moment. We're still seeing very high levels of sales activity and strong price growth in most market jurisdictions, including in Brisbane, Adelaide, Perth and Darwin, as well as most regional markets. Now, because of the importance of sales activity numbers as a forward indicator of what will happen with prices, we analyse sales volumes for every suburb and town in the nation every 3 months, and we put that information into a quarterly report called the Price Predictor Index. And pulling together the data for the winter 2022 edition of the Price Predictor Index, we can see that sales activity is as strong as ever in many parts of Australia. Adelaide certainly is still pumping, so is Brisbane. Canberra remains very solid. Perth and Darwin are both very strong, indeed probably the strongest that we have ever recorded with our quarterly analysis. In all these places, we like to see prices falling not anytime soon. So why do we read constantly in the media that property prices are on the way down across Australia? Well, it's because there is very little real analysis of the market by people with expertise. The media tends to think the rest of Australia follows Sydney's lead when it comes to what is happening in property market. But that is not the case, and my observation is that it's never been the case. Sydney and Melbourne are usually the exception to the national rule, which right now is that sales activity remains very solid and prices are continuing to rise in most markets.